Hi everyone, welcome to Madhuram Investment. Myself Ramesh Sahu, and today we are going to talk about investment strategy using Nifty PE ratio. See, when I had a session about PE ratio, in that I have given introduction about Nifty PE ratio, and after that, a lot of people have asked me to have one more session on the Nifty PE ratio and tell the everything why Nifty PE ratio is this much important. So that's why we're having this session. So before I start with this session, if you haven't subscribed to my channel, please subscribe and press bell icon. So see, what is Nifty PE ratio? So I mean, if you have seen any business channel, if you watch any business channel, you will see people talk about market is overvalued, PE is very high, and market is undervalued, PE is very low. You invest and all this. Why people talk about PE ratio for Nifty? Because that is what the point which tells you whether the market is undervalued or overvalued, whether the market is cheap or market is costly, with the help of which you can decide. I mean, a lot of people ask me, Ramesh, I have so and so money, can I put it in the market? Is it the right time to do that? So this is the time I tell them, check the PE ratio, and if it is below 18 or somewhere or around 18, invest it. So see, I'll show you one example. Okay, so I have my upper value at 24 so that you can understand it better, and 18. Okay, so see, just I mean, somewhere the lines are not that proper, so just ignore it for me. Okay, so 18 and 24, why I've drawn these two lines? See, if you see this is observe it properly, see, whenever market goes up to 24, it drops, it goes around 18, sometime 18, and then if you see 18, it bounce back, it drops again from 24, it goes up around 24, sometimes it goes above 26, about 26 or 28 also, but these points are very rare, but 24 is like short you will get these points. So, and then again it goes back in 18 also. This is like, these points are, 18 is very normal to get it, but getting 16 and 12 and 14 is like once in 5 years, 10 years you get this. These are like very difficult, but 18 is like indicator which says market is cheap. So what people do is, when they get market around 18, they start putting their money, and once they get market around 16, they go all in. They buy very aggressively, not like big institution uses this strategy, because they know once the Nifty touches 16, within one and a half year, market will go back to this level, the upper level. So what they do is they invest over here. The big institution, they put their money over here. See, where like people say this market is not doing good, we should withdraw all your money. Where in the other side, the big institution, what they do is they use this opportunity. They buy very heavily over here, and then when market goes up, they sell over here. And this is the point where small investor think market is performing very good, and they put money, and they get trapped. They get simply trapped over here, because then market starts falling. This is the point where big investor sell and the small investor buy, and then market falls, and the person who had invested over here, he will book his losses over here. And then the big institution, what they will do is they will start buying again. They will buy again over here, and then they will wait, and they within, see, I mean, 2008 market falls to 12, 14, and again 2010 it was back to that level. You can observe it like consistently. It goes like 2002, it went like around 16, 18, 14, then again it was back within 2004, it was back to 22, 23, then again it falls 2003, 4, 3, it falls to 14, 16, and then it again goes back. See, you can see this consistency. So that's why 18, around 18, you should start investing it. And once you get this level 16, getting to 12 and like 14 is like once in a like 10 years time. So you can't get this every time. So, but 18 is like consistent. So you should start investing over here and book your profit. And then again, market is back every 2 years, 3 years. I mean, I'm telling you my personal experience. When I invest over here, this at this level or this level, within 1 year, 1.5 year, I get my money 1x, 2x, wherein like if you invest over here, you have to wait for 5 to 10 years to get 1x, 2x. It is very difficult to make that point, right? Even in like if you invest in mutual fund, it takes 5 to 6 years to get your amount back, or get 1x or 2x. Okay, so that's why this strategy is very safe, and there are some other strategies also which we will talk in our coming sessions, but this is very safe strategy, and this will like risk reward ratio also. See, If you invest over here, your risk is only 2 to 3 points, but your reward is 7 to 8 points. So this is very, your risk is very low. You should invest over here and then book your profits over here. And I'm telling you personally, if you follow this strategy, but within 1.5 year, 2 years, you can double your money. Okay, so use this strategy for your purpose and try it out. And I'm telling you guys, you will see a good result. Okay, so that's all we had for this session. Thanks for watching and please subscribe this channel.